Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Wednesday 2nd of July, recording the video almost 6 p.m. Eastern Standard Time. I was expecting sideways or downwards movement. That's what we got. Price remains below the invalidation point at the hourly chart, which is really close by, and I'm still expecting that we're going to see a continuation of choppy, overlapping sideways or downward movement for a few more days yet. Maybe 4 days and maybe up to 11 days. I expect that when that's done, we should see a continuation of the upward trend, and that at this stage, the bull market remains intact. Overall, we should be seeing upwards movement with small corrections along the way, and I expect a small correction has now begun. Let's have a look at the wave count. The bullish wave count sees the credit crunch as the end of a big correction, and that's where a new bull market began for a cycle degree fifth wave. Within cycle wave 5, primary waves 1 and 2 are complete, and within primary wave 3, intermediate wave 1 is incomplete. This dash maroon channel is drawn in exactly the same way for both my bull and bear wave counts. For the bull wave count, it's correctly termed a base channel drawn around primary waves 1 and 2. A lower degree second wave correction, upcoming intermediate wave 2, should not break below the lower edge of a base channel containing a first and second wave 1 or more degrees higher. This is the trend line which differentiates my bull and bear wave counts. While price remains above this trend line, I will expect the bull market is intact. If we see a clear break of this trend line, then my bearish wave count will be my main wave count, but we are nowhere near that situation yet. In the short to mid-term, I expect overall upwards movement. At 2010, this small third wave at minuet degree would reach 1.618, the length of the first wave. At 2218, minor wave 5 in its entirety would reach equality in length with minor wave 3, which was a long extended wave. So this wave count expects both 3 and 5 within intermediate wave 1 impulse to be long extensions. The first wave was particularly short. The third wave ends just off to the left of the chart. It was 455 days in duration and only less than 1 point off 2.618, the length of the first wave. The subdivisions within it fit perfectly, and it contains the strongest upward momentum, so I don't want to label the third wave within intermediate wave 1 as anywhere there than other at that point, and so this is where the fourth wave ends and the fifth wave begins. There are only two structural possibilities for the fifth wave, either an impulse or an ending diagonal, and with this clear impulse unfolding here, it looks like we're seeing the middle of a long impulse. We have 1, 2, 1, 2, 1, 2, we need 3, 4, 3, 4, 3, 4, and then 5. At this stage, I expect a small fourth wave correction has begun and it's incomplete. It should be reasonably in proportion to its counterpart second wave, so it should continue for a few days yet, 4 and maybe up to 11 days if it is to reach equality with duration with subminuet wave 2. The fourth wave can't move into first wave price territory below 1884.89, but I'd expect, if it got down that low, for it to find support at this small channel. Draw this channel from 1 to 3, place a copy on 2. It's beautifully showing where upwards movement is finding resistance and downward movement is finding support. It should continue to do so for a while yet. We have some classic technical divergence at the weekly chart level from back here. We also have a little bit at the end of recent movement at the daily chart level and some divergence at the hourly chart level. That all supports the idea that we should be seeing at least a reasonable little correction unfold before we see new highs. The aqua blue trend lines are drawn using a classic technical analysis approach, not an Elliott wave approach. The lower one began back in November 2011. It's reasonably shallow and repeatedly tested, so it's extremely significant. For this bullish wave count, I would not expect to see any more than a breach of 3% of market value of this lower trend line for the wave count to remain viable. The upper trend line is a parallel copy, and it too is nicely showing where movement is finding support. There are clear instructions in my text article every day on exactly how to draw those trend lines. Let's have a look at my two options for this fourth wave, which I expect should show some alternation with the second wave, so it might be either an expanded flat or a triangle. It begins here, this point here. I have two options, an expanded flat or a triangle, and I just slightly favour the expanded flat. The triangle scenario is entirely possible. They have a close to even probability, but I slightly favour this one because it's a slightly more, well, a somewhat more common structure than a triangle. An expanded flat subdivides 3, 3, 5, and the B wave is over 105% the length of the A wave. Microwave C must subdivide as a 5-wave structure, either a diagonal or an impulse. At 1941, it would reach 1.618, the length of microwave A. Within it, no second wave correction may move beyond the start of its first wave above 1978.58. Alternatively, it's all the same to this point here. And then the other possibility for the fourth wave is a running triangle, which is either a contracting or possibly a barrier triangle. We have a zigzag for A, a zigzag for B. We'd expect a single or double zigzag down for C, a 3-wave corrective structure up for D, and then a corrective structure for E as well. For both the contracting and barrier triangle, the C wave may not move beyond the end of the A wave below 1944.69. That invalidation point is black and white. For a contracting triangle, the D wave may not move beyond the end of the B wave above 1978.58. For a barrier triangle, the D wave should end about the same level as the B wave, as long as the BD trend line remains essentially flat, and in practice what that means is D can move very, very slightly beyond the end of B. Unfortunately, the upper invalidation point is not black and white. That's the only Elliott wave rule which allows any grey area whatsoever, and it's not much. If the fourth wave turns out to be a triangle, then it most certainly could last another 11 days. Triangles have a purpose of taking up time and moving price sideways. This is my bearish wave count at the daily chart level. The maroon channel is drawn in exactly the same way. For the bearish wave count, it's a corrective channel around the upward zigzag of cycle wave B. Cycle wave B now is over 150% the length of cycle wave A. It's well longer than the maximum common length of 138% the length of cycle A, but it's still entirely possible. But because it's past that maximum common length, the probability of the bearish wave count has reduced, and that's one reason why it's an alternate. The target's the same, the subdivisions within this upward movement are the same, they're just 1 degree higher. That's all for me today with your S&P analysis, and I hope that all our members are having a fabulous day.